Now finally this evening, the South African rand weakened to 17.70 against the dollar, its lowest level in over a week, as the US dollar strengthened slightly. Now inflation rose to 3.5% in July, a 10-month high, but still within the Reserve Bank's target, leaving room for potential rate cuts. Moreover, Governor Lesetja Kganyago expects inflation to rise short-term before easing back to 3%. External risks, including a 30% US tariff on exports, are likely to impact key sectors. Now on the JSE, major indices traded in the red, with only small caps seeing modest gains. Market analyst Mushima Gama breaks down today's moves.
Our inflation figures were released today and they inched up to 3.5% in July. This would actually be the second consecutive monthly increase and the highest rate in 10 months. However, it was anticipated by most analysts, so it didn't catch us by surprise at all. The key drivers of this price growth were food and non-alcoholic beverages, alcoholic beverages and tobacco, housing and utilities, and restaurants and hotels. It now seems that people are out and about. Prices that fell were transportation because of the drop in fuel prices. So now, because our Reserve Bank Governor Lesetja Kganyago noted earlier this month that inflation is expected to rise in the coming months before gradually returning to 3% in the medium term, and because our inflation is still in line with the SARB's targeted range between 3 and 6%, there are murmurs that there's room for more rate cuts, which would be really nice for all of us. So inflation figures for 2025 have been rather subdued or passive. The uptick in food prices that we're currently experiencing may affect our next inflation figure, but also declining global oil prices may offset that rise. So we could be good at that end. What could be a bit problematic for the economy is the 30% US tariff on exports, which will definitely weigh on key agricultural and automotive sectors. Looking at the currencies, the dollar last traded flat against a basket of currencies. It seems traders are awaiting the US Federal Reserve's policy cues as well as their own interest rate decisions. Those decisions will definitely affect all the correlated currencies, including the rand. The rand is currently weakening at 17.72 from a low at 17.48, and I anticipate more weakness in the rand to 17.97 if it continues to trade above 17.72.